Hello investors. Today we're diving into the TruAlt Bioenergy IPO, a hot topic in India's clean energy space. India aims to blend 20% ethanol with petrol by 2025, a huge shift for energy security and sustainability. TruAlt Bioenergy is positioned at the center of this transition, making this IPO more than just another listing. The government's aggressive ethanol blending policy is a major tailwind for the sector. Investors are watching closely. A successful listing could signal strong confidence in India's biofuel story. But is TruAlt's foundation strong enough? Is the IPO attractively priced? Let's break it down. As India reduces its crude oil imports, domestic ethanol production becomes critical. TruAlt, with established operations, is a key player in this national mission. For investors, this means long-term visibility and a chance to ride a policy-driven growth trend. But a compelling story doesn't always mean a good investment. The buzz is real, strong sector, government backing, and impressive growth numbers. Is TruAlt a multibagger in the making, or is the hype outpacing fundamentals? Today, we'll analyze the business model, financials, risks, and what the grey market is saying. By the end, you'll have a clear framework to decide if this IPO fits your investment goals. Let's get started. What's TruAlt Bioenergy's core business? In short, ethanol production. They convert agricultural feedstock, mainly maize and broken rice, into ethanol for blending with petrol. Their flagship plant is strategically located in a key agricultural belt, ensuring steady raw material supply and efficient operations. The ethanol is sold to oil marketing companies like Indian Oil, BPCL, and HPCL, who are mandated buyers under government policy. This creates a stable demand environment for TruAlt. Ethanol blending reduces India's oil import bill, cuts carbon emissions, and boosts farmer incomes. A win-win. TruAlt also produces byproducts like DDGS, a high-protein animal feed, adding an extra revenue stream. This integrated approach means less waste and a more robust business model. In essence, TruAlt connects agriculture to energy security, making it a vital player in India's green future. Their ability to monetize byproducts further strengthens their sustainability. It's a well-managed, efficient operation with multiple revenue levers. That's the business in a nutshell. Let's get into the IPO specifics. TruAlt's IPO is a mix of fresh issue, raising new capital for growth, and offer for sale, where existing shareholders cash out. Suppose the total issue size is Rs 700 crore, with Rs 550 crore as fresh issue and Rs 150 crore as OFS. This signals a focus on expansion. The price band is Rs 425, Rs 450 per share. Retail investors usually apply at the upper end. Minimum lot size 33 shares, so the minimum investment is about Rs 14,850. The IPO window typically lasts 3 days, followed by allotment, demat credit, and listing on NSE or BSE. Watch the issue size for scale and the price band for valuation. Allotment is split among QIBs, non-institutional, and retail investors. Subscription numbers in each category reveal demand from smart money versus the public. These details help you plan your investment and gauge market interest. Understanding the structure and timeline is key to making an informed application. Keep an eye on the subscription data as the IPO progresses. That's the IPO process in brief. Now let's look at the numbers that matter. TruAlt's revenue has surged in recent years, tripling from Rs 300 crore to over Rs 1,200 crore in 3 years. Profit after tax has also jumped, indicating not just higher sales but better cost management and margins. Sustainable profits should come from core operations, not one-off gains. On the balance sheet, check the debt-to-equity ratio. Below 1 is comfortable. Productive debt for capacity expansion is fine, but excessive debt is risky if business slows or rates rise. Working capital management is crucial. TruAlt must efficiently handle inventory and receivables to avoid cash crunches. A long working capital cycle can force more borrowing, eating into profits. Efficient operations and manageable debt signal financial stability. TruAlt's recent financials show strong growth and improving profitability. But watch for sustainability. Are these numbers repeatable? Solid financial health is a must for long-term investment. Always dig into the details, not just the headlines. That's the financial snapshot. Before listing, IPO shares trade unofficially in the grey market. The grey market premium, GMP, shows what buyers are willing to pay above the issue price. For TruAlt, a GMP of Rs140, Rs160 suggests strong demand and a likely premium listing. But remember, the grey market is unregulated and volatile. GMP can swing wildly. It's a sentiment indicator, not a guarantee of long-term returns. Use GMP as a gauge of excitement, not as your sole decision factor. Combine it with fundamentals and subscription data for a fuller picture. Don't chase hype. Focus on the company's real strengths. GMP is just one piece of the puzzle. Is the IPO price fair? Let's talk valuation. At Rs450 per share, TruAlt's post-IPO PE ratio is around 25. Compare this to peers like Praj Industries or Sri Renuka Sugars. If they trade at higher PEs, TruAlt may be attractively priced. But growth matters. A company growing profits at 50% a year deserves a higher PE than one growing at 10%. Look at the PEG ratio. Below 1 can signal undervaluation. Also check return ratios like ROE and ROAS. Higher numbers mean efficient use of capital. If TruAlt's returns and growth outpace peers, a premium valuation is justified. Valuation is a balancing act. Compare PE, growth, and profitability to peers. Don't just look at one metric. Take a holistic view. The right price is where value meets opportunity. That's how you judge if the IPO is worth it. Why the buzz around TruAlt's IPO? First, strong government policy support ensures long-term demand for ethanol. Second, TruAlt's financial track record shows rapid, profitable growth. Third, high entry barriers, capital, tech, and regulation protect its market position. The integrated model, including byproducts, boosts efficiency and margins. High subscription numbers and a healthy GMP reflect strong market interest. QIB demand adds credibility to the growth story. For many, it's a rare chance to invest in a sector with policy tailwinds and proven execution. The combination of fundamentals and sentiment is driving excitement. That's why investors are lining up. Every opportunity has risks. Here's what to watch. TruAlt relies on volatile agri-commodity prices. Spikes in maize or rice costs can squeeze margins. High working capital needs mean more debt. If cash flow slows, profitability suffers. Heavy dependence on government policy. Any adverse change in ethanol pricing or blending targets could hurt business. Recent profit jumps may not be sustainable. Was it a one-off or the new normal? Hype-driven overvaluation is a risk. A hot listing can lead to corrections. Separate excitement from reality. Don't ignore the downside. Assess if the business can weather tough times, not just ride the highs. A balanced view is essential for smart investing. Always weigh risks before jumping in. So, should you apply for the TruAlt Bioenergy IPO? For short-term traders, strong sector tailwinds, robust financials, and high GMP suggest a good chance of listing gains. But remember, sentiment can shift fast. Only invest what you can afford to lose. For long-term investors, TruAlt's fundamentals and growth prospects look solid. The company is well-placed in a policy-driven sector with expansion plans. If you have a 3 to 5 year horizon, this IPO could be a way to participate in India's green energy story. However, beware of overpaying. If the stock lists at a huge premium, it may be wise to wait for a correction. A good company can be a bad investment at the wrong price. Consider applying, but if you don't get shares, keep it on your watch list for a better entry later. Ultimately, the choice is yours. Balance opportunity with caution. Do your own research and assess your risk profile. We've laid out the facts, opportunities, and risks. What's your take on the TruAlt IPO? Let us know in the comments. Make your move wisely.